Shall we have a conversation about how to get a business loan for a new business? If yeah, don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's convo, I want to talk to you about how to get a business loan for a new business. And this works like magic all the time. Number one, know the basics of a startup business loan. This is very important. A lot of entrepreneurs think they understand what a startup business loan is, but they really don't. In reality, they don't. So I'm going to explain to you. A business startup loan is a funding meant to help with the financial needs of a new business. So business startup loan proceeds can go towards things like working capital, the purchase of equipment, machinery, supplies, inventory, and furniture, and the purchase of construction equipment or real estate. It's very important to follow those rules because lenders expect you. Once they advance the funds to you, they expect your startup to actually use the funds to buy those things and not anything else, all right? New business owners can also consider business credit cards, certain SBA loans, and crowdfunding, among other options. And the thing here is that one of the biggest challenges, according to research, that a new small business must face is obtaining the capital necessary to support their initial growth. Right. So this is very important. So if you want to actually, if you want to get out there and start looking for loans, you have to know the lay of the land. Why? There are several small business loan options. You have loans that are available from traditional banks, online lenders, P2P lenders, and each one will come with their own set of pros and cons. And perhaps you have discovered that most of the low-cost options are not available to new business owners without a couple of years of a business under their belts, right? And traditional lenders also want you to have strong credit and or solid revenues. So while a bank loan may be your first choice, for the majority of startup businesses, a traditional loan will be out of reach. Banks have strict small business lending standards, and what they offer is often not available to brand new businesses. You may, however, be able to work with your local bank to secure equipment financing or other types of business funding if you have a solid business plan in an industry the bank serves. If you are unsuccessful getting a bank loan for a startup cost, there are other lending partners to consider. For example, you can go to lenders, as I said earlier, you have SBA lenders, you have P2P lenders, you have online lenders, you have alternative lenders. Step number two, you need to establish your business identity. This is very important. If you want to get a business loan for a new business, the lender must understand and must be comfortable that you're not acting as an individual, you're not a sole proprietorship, so you are a business. Okay, so in order to obtain financing for your business, you will need to create a separate identity from yourself. And this process can include several steps. So you need to create a business identity. So sole proprietorships make up the vast majority of businesses in the United States, but it can be very difficult to get a business loan, as I said. So you want to think about how to structure your business, whether you want to be a partnership, a limited liability partnership, LLP, a limited liability company, LLC, S corporation, and C corporation. Just so you know, remember that you can have a single member LLC, all right? So you can have an LLC with only one person. So each of these entities has benefits and drawbacks when it comes to taxes, liability, and other features. We actually have covered this whole legal structure concept in another show, so you might want to double check that. So after creating a business identity, you want to get an employer identification number, an EIN. And this is basically a social security number for businesses. So you can get that. You can go to the IRS website and you can request it for free. And the process is quick and painless, no problem. And you also want to get a separate phone number and address. So depending on the nature of your business, it may also make sense to get a separate phone number and address. So if your business is home-based, you want to consider getting a PO box or using a mail forwarding service. And these actions are not absolutely necessary, but guess what? They can show potential lenders that you are serious about keeping your business and personal life separate. One thing you want to do also is to open a business bank account. You want to develop a relationship with the local bank. Large national banks typically have more restrictions than smaller banks that take a more personal approach, right? So you want to open a business banking account with the local bank and use your account responsibly. This helps you build your reputation with the bank. Okay, and one tip I want to tell you here is that you want to register your business with the federal government in order to get an EIN. And once you have the EIN, you can build credit as a business, and you can also use the EIN to open your bank account. The third step, the third thing you need to do if you want to get a business loan for a new business is to review initial cost for your business. There is a variety of startup costs that you might encounter when you're getting your small business up and running, and every business's list of expenses will be different, of course, but here are some common costs that come with starting a business. So you have equipment purchases like cash registers, machinery and vehicles, technology purchases like computers, tablets and printers, initial inventory purchases, permits and licenses like city, country and state licensing. You have initial office supplies, business furniture, okay? And one thing you also have to think about is that after you pay this initial cost, you'll have ongoing expenses like taxes, rent or mortgage payments, employee payroll, etc. that you will need to cover as you grow your startup. If you really want to, so after you review an initial cost your business must cover, if you want to increase your chances of getting a business loan for a new business, you need to take care of what we call the internal fundamentals. So there are three things you have to do when it comes to your internal fundamentals. You need to boost your credit rating. So credit scores are the first things lenders look at when deciding whether to fund your small business. So some startup founders are seasoned entrepreneurs with high business credit scores, but some startup owners are new to the game, right? So if this is the first business you have started, you probably don't have an established business credit history. So if this is the case, your personal credit score will be used to gauge your credibility as a borrower. You just need to know that, all right? You need to also build your assets. So to secure a startup loan without a lot of proven business history, lenders will require that the startup owners have some sort of collateral. As a startup, you probably don't have a lot of business assets like real estate, equipment, or inventory. Instead, lenders might ask startup founders to provide personal assets like a home or a car. Of course, putting your personal assets on the line can be very risky. So if you can't pay back your loan, you will not only lose your business, you might end up losing your home, car, or other property. And one thing you also need to take care of when it comes to the internal fundamental is that you need to keep updating your financial projections. So if you're tackling how to get a loan to start a business, you know that you will need a viable business plan in place. So when you approach lenders, you'll want to make sure that you have updated the financial projections in the plan and that your projections, guess what, are still realistic. Very important. Okay, so to make sure you're not giving your lenders guesses, always keep up to date with where your business's finances are going. So besides the internal fundamentals, you need to take care of the external fundamentals. So you need to do a couple of things. Approach investors. So if you have an established relationship, say with an investor, you can ask them for the funds you need to buy assets for your business. Then you can use those assets to secure a loan with a commercial bank or other lender. Try the SBA. You might want to consider an SBA loan, right? The SBA offers something called a CDC/504 loan program designed to help companies purchase real estate and equipment, and this can serve as a collateral for a loan you need in the future. Work on building your customer base also, because lenders will be more comfortable funding a startup if they have a proven, reliable, and large customer base and a strong cash flow from it. Very important. So if you want to get more customers, you might need to up your marketing efforts. You need to update your website or publish more content related to your brand. You also need to understand how lenders evaluate your startup. This is step number 6, very important. You need to understand the language the lenders speak. So commercial lenders consist of banks, credit unions, nonprofit organizations, online lenders, and online financial institutions. So depending on the type of loan you're applying for and the lender, you may see different approval criteria. So in general though, here are some of the factors that lenders consider when you apply for a business plan. So for a business loan rather. So you have a personal credit score, credit reports, the cash flow, time in business, your industry, and collateral. Okay, now I want to specify that not all business loans require collateral, but having it can improve your chances of getting approved. That's because collateral, typically in the form of a physical asset, vehicle, or real estate, acts to secure the loan in case your business defaults. So instead of going after your personal assets for repayments, the lender seizes the collateral and sells it to satisfy the debt. Your industry is very important also, because in any credit situation, the lender's biggest priority is ensuring it gets repaid, right? And the industry your business is in could be one indicator of how likely you are to succeed. Okay. And so what's more, lenders will want to see whether you already have experience in the same industry or if it's all new to you. In general, if you've been in the industry for a long time, guess what? Your chances of success with a new venture are higher than if it's something you have never done before. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still having a conversation about how to get a business loan for a new business. Step number 7, you need to get your paperwork ready. And when I'm talking about paperwork, I'm talking about a series of things. So you need to get your documents and registrations ready. So getting a business loan to finance your new business venture can be challenging. So you want to prepare a business plan. You need to register your startup. You need to prepare the necessary documentation. In terms of business plan, you can either outsource it or you can do it yourself. So you can use even software. You have software like Enloop or LivePlan that helps you actually prepare the plan yourself. Or you can outsource it. You have many platforms out there, freelancer platforms like Fiverr or Freelancer or Upwork, that allow you to reach out to professionals, and you can get your business plan written and edited and reviewed for a small fee, $50, $100. All right, it's very important. In terms of the list of business loan requirements will vary from lender to lender, but there are documents that almost every lender will require. So bank statements, income statements, personal tax returns, resume, financial projections, and so on. So getting a small business loan can be a time-consuming process, and organizing your information can be a hassle. But you'll save a lot of time, believe me, you'll save a lot of time on your startup loan application if you get these documents ready before you apply. Okay, and here are the key business loan requirements. You have a time in business, personal credit score, business credit score if applicable, annual business revenue and profits, bank statements. If you're a startup, you will use here projected business revenue and profit, not actual data, but projections. All right. Bank statements, personal and business tax returns, loan purpose. You got to be very clear and explain what the loan will be used for, the desired loan amount. You need to, of course, the business plan, the industry, the entity type, whether you're LLC, LP, corporation, or S corporation or C corp, the business licenses and permits, the EIN, the proof of collateral if applicable, balance sheet, copy of your commercial lease, disclosure of other debts, accounts receivable and accounts payable agent, ownership and affiliations, legal contracts and agreements. So depending on the lender, you might also be asked to, you might be required to have tax returns and supporting IRS documents for both your business and personal tax accounts, and all financial documents that will be deemed relevant, including credit card sales, unpaid invoices, and bank statements. Number 8, you need to check if you qualify for a startup loan, because there is no need trying to apply if you don't qualify in the first place, and you don't want to have a lot of hit to your credit history. You don't want to have a lot of hard pulls. Okay, so once you have your paperwork in order, you must check if you must check to see if you actually qualify for the loan you need. So this means you need to look at the following criteria: the credit score, the time in business, the annual revenue, and the cash flow. Usually, most startup lenders will give you 1 to 3 months in minimum. Some may even say no minimum at all. So you need to improve your credit rating. So as a startup founder, you won't necessarily have any established business credit history to prove your credit worthiness. So lenders will look at your personal credit score as a way to gauge how reliable you will be as a borrower. You need to consider your time in business. Your time in business matters a lot for the business financing options you can qualify for. So in the eyes of a small business lender, the more time you have in business, the better. Okay, you have to review your annual revenue. Yeah, you need to review your cash flow. Cash flow is very important because, again, lenders might not necessarily look at your cash flow in terms of how long you've had them, but you yourself should be looking at it. Even if you've been in business for one month, you need to look at your weekly cash flows or your daily cash flows, especially when you're trying to learn how to get a business loan to start a business or to expand the business. So cash flow is not really, this is not complicated. Cash flow measures the cash coming in and out of your business. So as a startup, you might find that more cash flows out. You might actually find that more cash flows out than into the business, at least at the beginning. And this is a common problem many newer businesses face, right? Because you're not generating revenue yet. You're just spending and spending and spending. So if possible, you want to consider offering collateral to lenders so that you can increase your chances of getting approved. You also want to think about finding a co-signer. If you have a friend or a family member with strong credit, you can actually ask him or her to help you by co-signing a business loan with you. And now the thing here is that this can be a risky proposition, right? Because if you can't repay the loan, the bank can go after the co-signer, which can severely damage your relationship. So this is something you have to actually think about. And also think about talking to your bank about a loan, a local bank. So, right, you want a loan that is backed by the Small Business Administration, and most banks provide these loans. And they are less risky for the bank because the government will help out if you default on the loan. Number 9, you want to select a startup loan that suits your business. Now, there are various options when it comes to startup loans. And you want to choose one that really suits your business, not only in terms of the stage where your business is, but also how you will use the proceeds. So we have several types of business loans, startup business loans. So we have equipment financing, business credit cards, SBA 7A loans. You have SBA micro loans. You have micro lenders. You have invoice financing. You have crowdfunding. You can even reach out to personal friends and family loans. Family lenders. In other words, you can borrow from your friends and family and relatives for your business loan. And this is very important. Now, I want to quickly talk about the fact that when it comes to personal funds, you can use your 401k or IRA savings actually. So you may be able to withdraw funds from your retirement plans, borrow against a 401k, or use something called a ROBS plan to shift retirement funds to your business. Keep in mind that it may not be wise to bet your whole retirement savings on a brand new business though. Okay. And you can also even tap into home equity. You can dip into your savings, and you can borrow against your home equity, which in this case could be a cheaper option, but it is very risky. All right. And when it comes to micro lenders, you have micro lenders such as Action and Kiva, but those are of course, they're micro lenders. So the maximum you can get from those lenders is $25,000. Okay, but Action can go as high as 250 depending upon the business plan. And one thing I want to say here is that in terms of if you want to get a business loan for a new business, you also want to try other startup funding avenues. This is very important. And there are several. You can request vendor credit. You can use personal business loans. You can try venture capital, or you can seek a business grant. A lot of people don't know about business grants, but unlike loans, grants are extremely appealing because if you really think about it, they are essentially free money, right? And based on our research, there are plenty of organizations, both private and non-profit, that offer small business grant, but most of them are designed for established businesses, so your options might be a little limited here. You also want to think about venture capital. Why not, right? VC. So enlisting the help of investors is another way to get the funding you need without setting up a creditor-borrower relationship. There are several venture capital firms that specialize in working with and funding new business ventures. The only problem is that VCs are extremely selective about which businesses they're willing to work with. So, because their top priority, if you really think about it, is to maximize their return on investment. So it's essential to create a powerful pitch that highlights your product or service, business plan, and the likelihood of success. And I was talking to you earlier about vendor credit. Now, so what is that? Instead of looking for a business loan directly from a lender, you may be able to set up a credit arrangement with one of your top vendors, right? So vendor credit gives you, let's say, a set period to pay what you owe instead of requiring cash on delivery. So common terms include net 30, net 45, net 60. Sometimes you even have net 90, which give you 30, 45, 60, or 90 days from the invoice date, respectively, to pay. And the thing is that in some cases, you may even be able to qualify for a discount on the invoice if you pay immediately. Now, the thing here is that vendor credit doesn't work as a loan, giving you an injection of cash that you pay back over time, but it can give you the flexibility you need to manage your working capital and allow you to run your business more effectively, if that's what you're looking for. Also, many vendors will actually report your payments to the commercial credit bureaus, allowing you to use the arrangement to establish a business credit history, which is what you want to aim for ultimately, right? So the question here is that there's a big question, there's a big elephant in the room. Is it possible to get startup business loans with no collateral? The short answer is yes. There are new business loan options out there that do not require you to put up collateral to secure financing, but you will typically need to at least provide a personal guarantee on the debt to get approved. So as you explore how to get a loan to start a business, you will notice that there are a lot of business financing options that are not available to startups. Now, this could be discouraging, but there are also plenty of options available to you as you try to get your business off the ground. So you want to take the time to actually research and compare the options you discover. And this is where you need to think about which ones will be the best fit for your needs. And while doing the research, please consider the cost of each type of financing also, because the last thing you want is end up paying more than you like in interest. Running a small business can be very difficult, and starting a business might be the toughest part for entrepreneurs. And do not assume it is impossible to obtain a startup business loan. It is possible. Don't be afraid also to consider alternative lending options, because let me give you an example. Non-profit lenders, they offer microloan programs, but they may be the right choice for your business. Who knows? Or you can even tap into a business credit card, and this could be a risk worth taking if you have that business credit card in the first place, provided that interest rate is low. You want to have a low interest, a low APR business credit card. Business credit cards can help build good business credit for your business and could help bridge gaps in cash flow if absolutely necessary. Okay, so whatever options you choose, be prepared and do your research and do due diligence when you're looking to borrow. When it comes to your business plan or the projections, please be realistic. You need to be realistic with your business and your ability to repay the loan, even if you are approved for a high credit limit. Above all, please make sure that you want to keep your motivation intact. It can be a rough place, it can be a rough process, it can be a rough situation, looking for funding and being approved for a startup business loan. But the right motivation and the right business can push through. It can really, really help you and push you forward and get the job done. All right, folks, this is it for today's conversation. I was just talking to you about how to get a business loan for a new business, and there are 10 steps you need to follow. Here is a recap. Know the basics of a startup business loan. Establish your business identity. Review initial costs that your business must cover. Take care of the internal fundamentals. Take care of the external fundamentals. You want to understand how lenders evaluate your loan application. You want to get your paperwork ready. You need to check if you qualify for a startup loan. You need to select a startup loan that suits your business. And you need to try other startup funding avenues. I'll see you another time, but until then, remember, stay marvelous.